90% of the charts are pointing to a bear divergence while the rest of the world is extra bullish on the market right now. What better setup could you wish for as a short seller, guys? Phenomenal amounts of money about to be made by 30 market moves traders. I surely hope you will be one of them. In this video, we're going to review this setup, the easiest setup in the world. Instead of focusing all the noise, there's so much noise out there in the markets right now. Focus on the charts. And when you're going to focus on the charts, and we're going to bring some of these charts to your attention right now, but if you want to elaborate on the ideas I'm going to present to you in this video, you can basically take a look at any chart, any tickers that you trade, and they're going to highly resemble the bear divergences that I'm going to show you in this video. So divergence number one is very simple. Focus on the divergence between relative strength and the actual price action. So I'm going to walk you through the S&P chart right now. As you can see, back in July, when we nailed the top, okay, RSI was shooting to like 80, 90. That's what you see right here as far as the RSI. Basically, the market was getting really strong. It stayed strong for quite some time, okay? And when we noticed this deviation and divergence, as you can see, the price was shooting up right here and the RSI was getting close to 90. But on the next attempt of the market to move higher in July, the RSI reading actually dropped. When we take a look at the same circumstance now, this is exactly what we're looking at again. When you take a look at the fact that the price action, the price at which S&P is actually trading now, is higher than the price action which we had in July. Yet, instead of an RSI getting stronger, RSI is actually getting weaker. Now, stop using RSI as the bullshit indicator that everybody else is teaching you how to use it there. Basically, RSI, most of the traders will use it as oversold or undersold. Okay, if you use RSI in such a fashion, you'll never make any big money as a fucking trader. Okay, the point is, your goal is to identify divergences, and because they are the ones that pointed out to what the market is going to do next. So basically, we nailed the top right here. The whole world was fucking bullish here. Within days, we're getting this magnificent drop from almost 5,700 down to almost 5,100. That's the kind of move that gets you paid. So for those of you who like to jump in, jump out of the fucking trades, that's how you miss the big moves like this. And the whole point is to get on these moves, trading options, before it is apparent to the rest of the market that the market is collapsing. So the market is on the verge of collapse. The RSI on S&P 500 versus the price action is telling you that it's about to happen. It could be hours away, it could be minutes away, it could be within days away, guys. The market is going to fold. Now, that's the first type of divergence I want you to focus as we're going through the charts. The second type of divergence is very simple, okay? It's the volume, okay? The volume versus the price action, okay? What do you see when you're overall looking at this chart? Well, you're going to see that the biggest spikes in volume, they happen when shit is actually dropping. Look at these fucking red candles right here, guys. Now, there's only one green candle right here, back at the end of May, early June, okay, that even remotely gets anywhere close to the red candle. So basically, what does that tell you? That tells you as the market is moving higher, okay, despite of what you see in the news, despite of what the price action makes you believe, what you're actually looking at is a fucking market that goes higher, and there are days where a shit load of sales are going on. Who do you think is selling that? It's the big banks, it's the big institutions, it's the same fuckers that go on CNBC telling you, oh yeah, our price target is 5,600. This is the same fuckers that are dumping a shitload of shares on you as an individual investor. Like, man, things look bullish. It's another green candle. Let me go buy calls. And that's how you get fucked, okay? They're pulling an enormous amount of money out of this market, and they're buying it on super stupidly low volume, okay? Now, let's just focus on this chart so you can get this point, okay? The number one, you can look, there's a gazillions of chart patterns out there, okay? Most of them have similar characteristics, like whether we look at multi-top formation or head and shoulders formation. When something gets to the top, okay, a sure bear sign is the drop in volume. So look what happens right here in July. when we called for the fucking top, right here, do you see that the sell volume, as we're climbing to that top, the sell volume is huge, the buy volume is lower. But at the very, very top, when the RSI drops, all these indicators, they're connected. And a part of almost any indicator that you could possibly study out there, there's thousands of them, is a volume component. So why do you think the RSI is dropping here? Well, it's because the volume is fucking dropping. Relative strength, okay? The strength is less if something is going higher on lower volume. That's how you get a fucking top. So chart patterns that are highly bearish, like head and shoulder formation, the very key characteristic is at the very top of the formation, you're going to have a decrease in the volume. You're going to have a drop in volume in relation to the sell volume. So this is exactly what you had right here. Guess what you're looking at today? It is exact same shit. You have big ass red candles. Okay, and sometimes you're going to be looking at this and it doesn't make a whole lot of sense. Stock market doesn't make a whole lot of sense. So you got to look at it through the lenses of what doesn't make fucking sense. Well, what doesn't make fucking sense is you have a fat ass red candle like this, and on that day, guess what? The market, it doesn't drop a lot. We're getting an average 60-point drop. But within that 60-point drop, a lot of people are able to sell a lot of shit. Now, that yet has not translated into severe move lower, kind of like the one we've seen right here. Or actually, what I believe is about to take place is going to make this move in July, going into the August 5th translation. That move is going to be, that we're about to see, is going to be 5 times this move right here. We're talking about potential 2,000-point drop on S&P over the course of the next 60 days here, guys. Okay? I don't know, it sounds wild, but nobody wanted to hear it here. Everybody wanted to hear it when it became apparent shit is collapsing. So pay very close attention to this message, because I'm showing you like the stuff you should be really focusing on instead of, oh, Leo, I'm looking at the green candle. It looks scary. I think I'm going to jump out. Man, you can't be like, the market is at all-time motherfucking tops. There's a gazillion reasons for it to collapse. Even the statistical data, okay? Every October before the election, what do you get? The market fucking drops. There is zero probability that the market will not drop in October. I'm recording this on October 7th. So there is 100% probability the market will fucking drop from here. Now, what we don't know is the magnitude of the drop. Okay, and considering the context, the pre-existing fucking conditions that the market's been going higher for 3 years in a row without having more than a 10% drop, we're about to get a 20% fucking drop. So the question is, are you ready? And are you focusing on the right things on the chart in order to keep your cool together when it comes to holding your position? Don't be the bitch that jumps in and out of trades. You'll never make money like that. Okay, so the third thing to look at, so far we looked at a divergence between the RSI and the price action. Now I've shown you the divergence, and all of these are bear divergences, right? The market is going higher, struggling actually to go higher. You would think that based on the job report we got last Friday, okay, well, sure enough, we should be at all-time highs, but guess what? On such a great job report, we cannot even get to all-time highs that were set prior to that a few days before. What does that tell you? The market is getting increasingly weak. We have never seen a weak-ass market like that in years. And yet, some of you are like, man, but it looks green. I can't be buying puts. What the hell is wrong with you? Look at this shit. This is the easiest setup in the fucking world to make money on puts. Here's the cross on the MACD. Well, let me show you the last few times MACD made such a cross. What the fuck happened? Well, here's the MACD cross in July, right? So first, you pay attention to what? The RSI divergence was the price action. We've pointed that out. We've pointed the cross on the MACD. What happens next? Well, there it comes. Fucking 700-point drop. 600-point drop. This is the last time MACD crossed not so long ago, right here. This is a beautiful drop, okay? This is another instance on this chart where MACD crossed, the black line crossed the orange line to the downside. What happened? Well, there's a drop from 5,300 to almost 5,000. So one thing is unanimous here is the fact that anytime you get a MACD cross, shit drops. Cross, drop. Well, we just crossed. We haven't had a drop yet, okay? But if you were to study the history of all these MACD crosses, this is a bear cross. Yeah, it's just like when you have a moving average. Moving average has not intersected yet, okay? But it's in a position of early formation of a death hook, which leads to a cross. So at some point, you're going to have the blue line and the green line here crossing the orange line. We're not that close to that, but we're not as far as you would think by looking at this chart from it, because this is a predecessor of a cross that's coming on here. So let me summarize this, okay? Bear divergence on RSI versus price action. Bear divergence on volume, okay? Nobody's buying. That's why we can't even break out to all-time highs here, okay? Lower volume at the top. It's the number one bear sign that a major reversal in the opposite direction is about to take place. So when you combine not just one thing, but also when you throw a MACD crossover, which is a bear death cross, okay, that coincides with lower volume as the market tries to move higher, when it coincides with lower relative strength, okay, all you see, basically what this makes this move in the market, it makes it total bullshit. It is not going to hold up. The market is not going to go fucking higher from here. The market is about to collapse the fuck out. So now let's look at the other charts, because you could be saying, well, this is just one chart. Well, this is not just one chart. This is the representation of 5,000 companies is what we're looking at here. So chances are, if you're going to go and look at each individual company that is in the S&P 500, their chart pattern will highly resemble this. And you will see major divergences on every chart that you look at, which we're going to do. We'll take like a small sample. We'll look at a few of them. But you're going to say, okay, but it's the S&P 500. I'm going to say, no, it's not just the S&P 500. So let's take a look at NASDAQ. What do you see? Do you see it is identical? It is identical. So we're not talking, like if we're to look at S&P and I showed you everything, and now we're to come to NASDAQ and we're to see an entirely different picture, you could argue that, hey, this is not a market crash. This is a transition from one sector to another sector, as you often hear them fuckers talk about in the news, okay? But that's not the case, because you got same divergence, right? The price is shooting from here, around here, okay? We're nowhere. I mean, the actual relative strength on NASDAQ is even lower than on the S&P 500. As we are trying to bounce, or we're getting to the same level where we were right here. Well, RSI at this point was at 70. We're at 58 now, okay? So there is a bear divergence on the RSI. The volume. There is a bear fucking divergence on the volume. Put your glasses on. All these big sell-offs, okay? The red candles representing big selling action. The selling action on NASDAQ, despite of the price action moving higher, represents a shitload of people selling, not buying, okay? There's a lot more people selling than buying. And what is difficult for a normal trader to understand, well, if there's a lot more people selling than buying, then how can the index even move higher, okay? Like there are machines that are set up, okay, to go and push this market higher incrementally while they're actually selling, okay? So understand this, when we look at the MACD, you got the same cross. This is a bear cross. This situation is about to escalate, just like we got an escalation of the conflict in all over the world. I mean, we're facing World War III. At any given moment, I would say there is a World War III in the market that everyone is discounting right now. And I'm not saying that, clearly there's going to be certain sectors that'll benefit from the war. But like overall, when we're looking at Bitcoin and everyone is so fucking bullish on it. Okay, let's take a look at that. BTC USD. I mean, this is not a bullish chart, damn it. Okay, look. The crossover just happened. Look at the volume. Is anybody really fucking buying? No, but the price is going higher. That is a bear divergence. At the moment where 99% of people are bullish on Bitcoin, okay, they choose to focus on what? The price action instead of all these bear divergences. Okay, look, not so long ago, we were pushing 70 on the RSI. Now we're almost there price-wise, right? We're not that far off 66, 70,000 mark, but the RSI is way lower. This is a bear divergence on the RSI. When you look at the fucking volume, what do you see? Okay, all of this sideways, you could call it sideways, or you really can't call sideways. I was going from 70,000 to 49,000 within, 2 or 3 sessions here. That's not bullish. That ain't. And then since this major sell-off, do you see any big buys here? Nobody's fucking buying. There is an appearance that, oh, everyone is buying. But the reality is, look at this volume. Look at this actual data of what's happening on day-to-day basis. There is more selling going on. Selling. Big-ass candles. Sell, sell, sell. Where are the green candles? Look at the fucking shit today. Where is this candle? You can barely see this candle right here, guys, but yet what? Well, Bitcoin is higher. It looks green. This shit is about to collapse. Within the blink of an eye, we're going to go from Bitcoin 65K, we're going to be at fucking 45K. And people are, every time we're going to drop to 58, 50. People are going to be like, man, there's no way it's going to break 50. You're going to see we're buying here. And then those people are going to be buying at 50 and be like, oh, man, I can't believe we're at 45. Man, you're about to see all of these constraints, right? When you have some major volume like that, where big players are actually getting out, but yet you have not had a major break besides this one instance right here. This was August 5th. Okay. All these other instances, price is constrained to the upside while everyone is selling. And at one point, okay, institutional banks, they got so many short positions, they're like, man, fuck it. Let this thing break, okay? And we're so close to that moment. So far, we're taking a look at S&P 500, we're taking a look at NASDAQ, we're taking a look at the state of crypto by just glancing here. I mean, Ethereum, like if you were to like, but Leo, that's Bitcoin. Who's like, man, we had traders like last week make 300-400K on Bitcoin shorts. Okay. If you're missing out on that, guys, you go to 13marketmoves.com, go to 13mmtv.com, sign up, set up your account properly so you can take these trades. I mean, this chart is even more bearish. Do we have the MACD bear cross? Yes. Do we have a divergence on our RSI? Yes. Do we have, look, here we even have the crossover maintained right here, which took place around, the early days of August. And since that gap down, like we're still nowhere. I mean, this thing that anytime it touches 27, 2800, it gets shut down immediately. And look at this, right? So this pump from 2300 to 2500. Look at the volume. Like nobody's actually participating. Look, everyone is getting the fuck out. So this thing has zero chance of going to 2800, 3000. I mean, forget it. If by a miracle it get to 27, 2800, it's the biggest short selling opportunity of a lifetime right here. I mean, this shit is easy. By definition, the market will fucking collapse in October, okay? And then from there, it's just a matter of, there's so many things that could go wrong between now and the end of October, between now and the end of November. I mean, like if you were to trade 2 months out of your life to trade the markets, you should do it now, okay? That's how simple that is. Now let's take a look at the old famous small caps. Oh, small caps is the shit. They're going to the fucking moon. Are they really? Well, look, it doesn't matter which sector you look at. Okay, we looked at S&P, we looked at NASDAQ, we looked at crypto, Now we're looking at the small caps, which the whole fucking Wall Street is bullish on. They're bullish on what? On this fucking black candle that we had on Friday? On the greatest job report, okay, which everyone should share and take this market to all-time highs. Even on that, okay, great job report should be great for small caps. And they make a black candle? What the fuck? This is not bullish. Do we have a divergence on the RSI? Yes, it's a bear fucking divergence. Do we have a major divergence here on buying versus selling? Yes. As the shit moves higher, guess what? Ain't nobody wanting to buy it. That's a bear, not a bull. Do we have a MACD cross? Yes. Checkpoint. Cross, cross, cross. It's a bear cross. So for some of you disbelievers, yeah, but Leo, I mean, these big companies, they're not going to go down. Let's take a look at some of them. Apple, it's about to go to shit. Apple is going to break $200 within days. It's at $225 now, okay? Do we have the RSI bear divergence? Yes. It was at 90, okay, here. When it gets to here, the RSI is at 90. It shoots even higher. The RSI drops. We tell you, short the fuck out of Apple back in July. It goes on to 200 bucks. Jumps out again, gets tried close to this level, RSI even lower. You get a progression of RSI bearishness here, and now on the last attempt to go above 230, okay, and gets to 233, RSI is even lower. It's at 49, so a big cap stock like Apple, which every institution owns in the world, okay, is showing an enormous sign of weakness. And as I pointed out in many videos prior to this one, Wall Street is a herd of sheep. They all head out for the exit at the same time. So maybe somebody was buying here. They weren't buying at the same time. Maybe somebody pushed it a little bit higher here while somebody was smart enough to be selling this shit, okay? And now here comes the I story. Nobody even wants to hear it or buy it anymore, with the exception of a few market participants who are like, oh, we missed out on the whole lot. Man, it's fucked. Apple is fucked. Okay? And officially, Apple, like, if they're not buying some solid companies with strong balance sheets like Apple, Apple's got an RSI now officially lower than S&P 500, lower than NASDAQ. Okay? If the key leading stocks are beginning to drop, look, it's simple math. They, the big names, the big seven, or, the shitty seven, which, they've been known at since we've called the top and all of them in July. Okay, the shitty seven are going to take the market to shit. Okay, because all of these charts are total shit. Like, this is just the chart of Apple. You think this is the worst chart? Well, there's one stock the whole fucking world is bullish on. All right, and that's Microsoft. Whoa, that don't look bullish at all. Everything I've talked about in every chart I have presented to you in this video, it is the same identical divergence. It is bear divergence on RSI. It is bear divergence on the volume, which is even more pronounced in the top AI play. Yeah, oh, Microsoft, it's the AI shit. Yeah, it is going to shit. That's the only part of the sentence that they're correct about. So MACD is, guys, the cross has already crossed on MACD for Microsoft. And just look, since it crossed, it's going nowhere but lower. And some of the indexes I've shown you earlier, their moving average have not crossed yet. They're beginning to form a bear hook, which leads to a bear cross. But in case of Microsoft, it's here. I mean, it is so close. I mean, the 52 is about to cross the 200. And then we've got, the green line that's also about to cross. I mean, this is as bear as it gets. I mean, Microsoft is going to hell. And, like, I don't know where hell is for Microsoft. 325? Not with a not so distant future. I mean, I think that's where the next support is going to be. I mean, not to say that it can't, first get to 400, get back to this 485 level. It could be some buying here going on. But, like, overall, I'm talking the next few weeks, like Microsoft 30% less. It can happen. It can easily happen. I mean, the chart looks so bad. And again, like this is not just, okay, bear divergence here, bear cross here, bear divergence on the volume here. Okay, when you look at the composition of this chart overall, okay, here's your shoulder 1, here's your head, here's your shoulder 2. Okay, what happens at the top formation? Okay, look at the volume. There's no fucking buy volume here. None. Nobody's buying that shit. But Leo, Microsoft is such a good company. It is the AI play. Well, I'm telling you, the charts are telling you it is not the AI play that's going to go anytime higher at any point soon. Shit is about to correct 30%. And if you think they're not buying stocks like Apple and Microsoft, okay, like if Apple and Microsoft drop, what do you think is going to happen to the index? But Leo, but they're cutting rates. It's good for the banks. Is it? Let's take a look at the banks. All right. BLK, right? BLK. BlackRock. Larry Fink. I don't know what Larry Fink is thinking right now, but he's got to be thinking like, damn, I'm buying a lot of puts for protection on my own fucking company. Okay, because this chart is getting out of control. You got a bear divergence right here on the RSI, just like we did back in July on all these key stocks that the whole fucking world was bullish on. All right, here's your bear divergence right here. Price goes higher to like 960. What do you have? RSI drops. Okay, that is your first sign that there is a trend reversal beginning. Okay, what do you have here on the MACD? Oh my God, no, this can't be real. No, Leo, you've made this shit up. Go look at the fucking charts yourself. This is a cross. This is a bear cross. This is not a bull cross. And where is the buying? All the way from 820 to here to 960. What do you see? Do you see any buying? Where are the fucking buyers? I'm telling you, this is a gimmick. This is a bullshit move that's not going to last. This shit is about to fold the fuck out in a way that nobody could see it. I mean, can BlackRock hit 400 by January? I think yes. Okay, BlackRock's going to be fucking trading at half of where it's trading today in like 5 months, 4 months. It's a 2008 setup, okay? 2008 setup combined with 93, 90, 74 transition. You got to be absolutely blind not to see that. And yet, the beautiful part to you as a trader that somehow 99.9% of people in the world don't fucking see it. Which is the very fact when you trade options that is ideal, because the options premiums are not pricing the move to the downside that's going to come in like a fucking tornado. That's going to come like a hurricane, you know, Cat 5, okay? Or maybe call it even Cat 6. I don't even have they have a Category 6 on tornadoes, but if they had one, okay, you're about to see it play out in the stock market. So, BLK, billions, trillions of dollars, all right? It's all about to go to shit, all right? So, I mean, we're taking a look at tech. We're taking a look at banking stocks. Okay. Well, here's something else Wall Street is highly bullish on, right? Building stocks. 0.5% rate cut supposed to be great for home builders, right? Wrong. Apparently, when the Federal Reserve announced the rate cut and when Lennar reported its recent earnings report, despite of what appears to be highly positive, forward-looking statements, okay, the stock hits all-time highs on the expectation of an interest rate cut. But since the interest rate cut has been announced, it does nothing but go fucking lower. And it is still trading close to all-time highs. But guess what happens to the RSI? You got bear divergence on the RSI. You got, does this look like a green candle to you? No, it's red as hell. So, talking about bear divergence, on volume on the days when Federal Reserve is cutting rates and it is supposed to be actually the climax of all the bullish momentum, okay? The beginning of the next great bull run for the building stocks, because so many more people are going to be able to buy more homes. Well, it's a half rate cut. As pointed out in many messages over the course of the last few months, people are losing jobs right and left despite of what they're telling you in the report. They're bullshit reports, because they're all going to be revised. And they're lying to you straight in your eyes. And later, I don't know, last month they revised the jobs. The job numbers they were reporting all year are all but like 1 million jobs. And yet, they give you another great job number just to, I guess, just to see what happens. Hey, will the market even believe it? And I think we're at a point where the market just man, are y'all fucking crazy? There's no way we had such a job gain. And that's why the market is struggling to go higher. Okay, but the charts already got it all here. Okay, if they're not buying home builders on what appears to be the most bullish positive catalyst for home builders to go from here, sell a lot more homes, okay, and instead on that news home builders are dropping, what does that tell you? This is a fucking top. And remember, the number one bear characteristic I have told you about the markets and the top formations is when something goes to the top, check the volume. Well, right as Lennar goes to all-time highs, where's the volume? Where is the fucking buy volume? Can you find it? Somebody give me a microscope here. But nonetheless, the next day you can clearly see the selling. You can clearly see the selling then. You can clearly see the selling today. Okay, there's a lot of fucking selling. And the cross has just recently occurred. And since then, the stock just can't catch a break. And it's going to go way lower. I even told you in some of the podcasts, Lennar is going to be trading at $8, $12, 12 months from now. So this shit is about to collapse 90%. And what you're seeing is just the beginning of it. Now, Leo, this is just Lennar. No, this is not just Lennar. Okay, here's another home builder. And guys, we're talking about KBH. They're not even building the most expensive homes, right? Shit is down. Same setup as in Lennar. Hits all-time highs, bear RSI divergence. Look, as the stock goes higher, actually everyone is fucking selling, and there's your MACD cross. The setup is the same. DHI. Well, Leo, this stock is way better than KNBH. What? Look at this. It's the same. Here's your black candle representing the top. Nobody's buying it at the top. The volume is drying out. More sellers are coming in. Okay. RSI divergence, bear cross in the MACD. I can show you chart after chart after chart. It is a top in fucking home builders. Toll Brothers. Now they build a little pricier home. Do you see anything different? It's a fucking top. It's a lot of selling. It's a bear cross, okay? I'm telling you, 90% of the charts, they have the same bear divergences. And the importance of going and looking at all these sectors is what? Because you want to be certain that we're heading into a market crash. We're heading into a market collapse. You want to be certain as a short seller that you're not going into some rotation where, okay, let's say they take money out of the shitty 7 and they put it into some bullshit, Russell 2000, the small companies that are going to be getting hit the hardest, okay, is what everyone is bullish on now. But clearly, we've taken a look at the IVM chart and it's not the case. So any sector, anything, look, we're looking at multiple stock sectors. We're looking at every index. They have the same bear divergences. Okay, the question is, how do you trade it? What is the next stuff that's actually going to collapse the fuck out? Okay, if this is a top in the housing sector, okay, well, it should be a top in the auto manufacturing sector as well. Okay, so all of these stocks, guys, the list goes on. I can give you trade after trade that is about to collapse in the next 12 months. There's going to be stocks that are going to be going down 90%. The question is, do you know which strike to buy? Do you have the confidence and the balls to stick to your trade? And that's really are the two underlying conditions that prevent a trader who actually really seriously wants to advance in trading and make millions in trading. And that really is the two reasons that prevent traders from fucking making it happen. Okay, number one, you short the shit that doesn't move. You don't know which stocks to short. You're trading the wrong product, basically. Number two, you don't have your account set up properly to trade options on futures. You're trading individual stocks, which at times, again, they don't move. You got to be trading the indexes. They're going to be collapsing after hours. If you're missing the after hours pre-market action, you're missing the biggest moves in the market, because contrary to the general belief, the biggest moves in the market, they never happen during the regular trading session. They always happen outside of the regular market hours. So if you don't have your account set up to trade options on futures, you're missing out some of the biggest fucking trades. If you're not trading options on Bitcoin and Ethereum, you're missing out some colossal trades, okay? And even if you did all this and you didn't have the balls to stick to the trade, you're cashing out too early without letting your trade really build up with the exponential gains, okay, you're messing up some of the greatest market conditions of all times. So if you need help, if you really want to take your trading skills to the next level, guys, get in touch with 13 Market Moves. Go to 13mmtv.com. Go to 13marketmoves.com, guys. Don't waste these precious market conditions, because they come one in a few years. So this is it. If you were to trade 2 months out of your lifetime, you need to begin trading today. You need to be opening these positions today. Not when it's going to be apparent to everyone shit is collapsing. By that time, options premiums are going to be 5 times more than what we're paying for them today. By that point, option premiums are going to be 10 times more than what we're paying for them today. And that is likely when an average trader, okay, is going to be getting into a fucking trade. And then you sit there and you will, well, Leo, how do you make a 100x trade? Well, you don't make a 100x trade by buying option premiums for 10 times more than what we're buying them here for at 13 Market Moves. That's not the fucking recipe. Okay, by the time the rest of the market understands it is a collapse, it is too late. So you need to be pulling the trigger on this now. Get in touch with the coach at 13 Market Moves. Sign up to trade with the coach today. Let's fucking go.
Make your move, cowboy.
I got the horses in the back, horse stock is attached. Head is matted black, got the bushes black to match. Riding on a horse, ha,